In 2024, the American car market hit a post pandemic milestone, nearly 16 million new cars sold, a 2.2% jump from the previous year. But behind this record breaking figure lies a fascinating story of shifting trends, fierce competition, and surprising winners and losers. From the dominance of gas powered trucks to the challenges faced by electric vehicle pioneers, the auto industry is undergoing a transformation that could redefine its future. Let's start with the big picture. Larger, heavier vehicles like SUVs continue to reign supreme in the US, a trend 50 years in the making. Brands like Toyota and Ford thrived by meeting the growing demand for hybrids, while Mazda stole the spotlight with a staggering 17% sales increase, their best performance ever in the US. Joining them in success were Honda and Mercedes-Benz, with the Ford F-Series once again crowned America's best-selling vehicle. No shock there. It's held that title for an incredible 42 years straight. Meanwhile, lower interest rates, better inventory, and enticing dealer incentives helped giants like General Motors and Ford post their best sales since the pandemic. But not everyone thrived. Stellantis and Tesla, two brands synonymous with innovation, faced setbacks. Tesla's sales dropped for the first time in over a decade, down 1%, despite a 70% rise in its stock price. Even the highly anticipated Cybertruck couldn't turn the tide. Why? Tesla's growth depends on a future filled with robotaxis, solar roofs, and battery powered dreams, visions that remain just that dreams. And Stellantis? It's a cautionary tale of overpricing and miscalculations. With Jeeps priced above $100,000 in weak demand, inventories piled up, profits fell short, and the CEO left abruptly. EV challenges. The electric vehicle market also faced a reckoning. Automakers like Rivian and Lucid revealed jaw-dropping losses of $33,000 and $338,000 per vehicle sold, respectively. Even with Biden-era tax credits, EV sales struggled to gain traction. And if these credits disappear under a potential Trump administration, the EV market could face an even steeper uphill battle. The reality is stark. Boston Consulting Group estimates automakers lose an average of $6,000 on every EV sold in the US. Electrification might be the future, but for now, it's a money pit. Shifting strategies. Meanwhile, legacy brands are pivoting. Jaguar, for instance, paused production entirely in 2024 to rebrand and focus on electrification. Their bold new slogan, "Copy Nothing," ironically came with a logo that felt eerily familiar. And their concept car, a colorful, controversial design missing a rear window. But hey, at least it still has wheels. The future of the auto industry hinges on its ability to innovate while staying financially sustainable. As EV adoption slows, automakers may look beyond batteries to explore alternative technologies like hydrogen fuel cells and synthetic fuels. Self-driving cars could make a major comeback, not as luxury novelties, but as practical solutions for logistics and urban transport. Government policies will also play a critical role. If tax incentives for EVs are reduced or eliminated, will automakers find ways to make these vehicles affordable without subsidies? Or will we see a return to gas-powered dominance in the US? Finally, consumer behavior is evolving. Younger buyers are increasingly prioritizing affordability and sustainability, while urbanization could drive demand for smaller, more efficient vehicles. The question is, can the industry adapt to these changes, or will it be disrupted by new players like tech companies entering the mobility space? Conclusion. The automotive industry is at a crossroads. Decades of investment in electric and self-driving technology haven't yet delivered the returns companies hoped for. But one thing is certain, the road ahead won't be a smooth ride. How automakers navigate this changing landscape will define the cars we drive and the way we drive them for generations to come. This version ties the